Hello everybody, this is Toni Turner and welcome to the market now as of about noon Eastern on Friday, September 1st. Before we start, all of us at ToniTurner.com wish all of you a wonderful Labor Day weekend. And as well, please know that we are holding the residents of Texas in our hearts and in our prayers. God bless. Well, the market is higher so far today after a tepid jobs report. U.S. jobs growth slowed more than expected in August after 2 straight months of hefty gains, but the pace of increase should be more than sufficient for the Federal Reserve to announce a plan to start trimming the massive bond portfolio it built to support the economy. Persistently sluggish wage growth, which is what we have right now, though, could, however, make the U.S. Central Bank cautious about raising interest rates again this year. And as you all probably know, we do have an FOMC meeting toward the end of this month. Okay, and on all that news, let's go forth and look at 3 charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a chart of the S&P 500 spider, symbol SPY. When I captured this price today, it was trading up here at $248.04. And so far today, we have a new all-time intraday high for the SPY at $248.09. Go SPY. Now that's as compared to the August 7th all-time closing high back here at $247.87. Now, of course, since that day in August, the SPY has fallen on big distribution days down to its 50-day moving average, poked back up above the 20-day, fallen back down to this trend line I've drawn, then kind of scooched around and then moved higher and back up to, again, the all-time highs today. Now, on this screen, the red line is the 20-day moving average, the green line is the 50-day moving average, and the black line is the 200-day moving average. They are all simple moving averages. Now, what we have, we want to remember that the market does like to rally before a holiday, and so far today, that's no exception. We've done very well. We will see next week whether or not this current rally has legs. But right now, we sure can't argue with success. The SPY has support at the 50-day moving average, and right now that's coming in at $245.05. And then quite a bit of potential support at $244, down here where you see this trend line coming in, $242, we see down here, right down in here, and of course down at 240 or 2400 on the S&P 500 itself. So there's quite a bit of potential support here, and of course maybe, just maybe, the SPY can rally next week or in the coming weeks of September up and start, it's in an uptrend, but start maybe even more spectacular one. Excuse me. We're going to have to wait and see how that happens. September is typically a volatile month, so it is something that we want to remain aware of. Now, the 50-day MA, again, is our simple boundary for strong short-term uptrends. Again, September is typically a volatile month, so we want to take this into consideration. I'm going to keep, for one, I'm going to keep firm protective stops on all my positions. And remember that November, December, and January are seasonally the best months of the year, so you may want to keep a little cash on hand to take advantage of those upcoming opportunities. Okay, and now let's on to our next chart. Today, again, we're going to look at a daily chart of the PowerShares QQQ, symbol QQQ. In Toni's Market Club, we always keep an eye on the QQQ as well as the SPY. They're really the market guides, so to speak. So far today, the QQQ also made a new intraday high at $146.58. after making a new all-time closing high Thursday at $146.20. Now, when I captured this chart, the Q was sitting at $146.01, just a little bit off those all-time highs. So far today, it's in a spinning top formation after 3 strong days up. Now, there was some short covering, I can tell by looking, in this past rally that we've had in this past week, although I'm certainly not going to argue with it. It's fantastic. It's kind of done so on short volume. Excuse me, we have a little sign blocking that, but the volume has been low this week, as is normal for a week before a long holiday weekend. So I really want to see, along with the SPY, if the Qs can continue higher next week or if they have to pull back and take a rest. As you can see, the Qs have support here at $142.11. We'll have to see if the FANG stocks can continue their move higher. Apple's certainly doing well, of course, in advance of its new iPhone. So this is all good. We can't argue with it. And on that note, let's go forth and look at our final chart for the day. We're going to look at the SPDR S&P Materials ETF, the XLB. Now, top components in this exchange-traded fund are Dow Chemical, DuPont, Monsanto, Praxair, and Ecolab, and Air Products. And of course, there's a bunch more. Those are the top ones. In fact, you could watch Dow Chemical and DuPont because those two have over 20% weighting in the XLB. Now, the XLB rose to an all-time closing high on July 25th up here at $55.80. That was an all-time high. From there, it pulled back down to the August low down here, and that was at $53.41. Since then, it's rallied, I'm going to say gently. It made a kind of a pennant formation here, almost a bear flag, but then it broke out from that back above the 50-day moving average. And on very low volume today, which makes sense because of the holiday coming this weekend, it is now back up to $55.29. Now, with infrastructure in the spotlight, materials may stay in the with infrastructure in the spotlight, excuse me. We may see materials stay in the foreground here, and if the market remains positive next week, I may add shares of the XLB into my current positions. Now, my preference, of course, would be for it to pull back closer to its 50-day moving average. I'd like it to pull back a little closer to, say, $54 or $55, $54 and change. I do want it to remain above, again, the 50-day moving average coming in right now at $54.49. But should it pull back and then bounce up off that line, I definitely may look at adding shares to my portfolio. Conversely, as you all know, if the XLB pulls down to close below the 50-day moving average, I will exit the trade. I only want to keep it if it's above the 50-day moving average. Now, the XLB, it does not usually have enough volume for day trading, so this would be for a little longer term hold. And now on to this week's economic reports. But first, please join us this coming Tuesday. We're going on Tuesday instead of Monday because the market's closed. Tuesday, September 5th, for our next session of Toni's Market Club. We'll talk about which side of the market to trade, have a mini trading lesson, and I'll give you 5 stocks and or ETFs that may be ripe for high potential trades. This is a low-priced, high-value opportunity to learn more about the market, become a smarter trader, and make more money. So please join us. For those who cannot attend the live session, it's not a problem. The recording of our session is available to all of our members just a few minutes after the session ends. For more information and to join, go to tonysmarketclub.com. Now for economic reports in the coming week, of course the market is closed for Labor Day on Monday. Nothing much on Tuesday. On Wednesday we have ISM services, crude inventories, and the Fed's beige book in the afternoon. Thursday we have our usual jobless claims and natural gas inventories. Not much going on Friday. Have a wonderful Labor Day weekend. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.